And welcome to this pre-market live stream on a day where a heck of a lot is happening on Wall Street. And I want to essentially give you the sort of briefing you'd get if you were sitting in an investment bank or somewhere on Wall Street and there'd be somebody a bit more experienced, perhaps, who'd give you a breakdown. And that's exactly what I used to do, is to sit in a 7 a.m. morning meeting inside of a bank. Hated the bloody thing, but it was very useful. So you had to kind of try to stay awake. So I hope you're awake this morning. I'm going to walk you through the following, provided more than 100 of you at least smash the like button. Otherwise, Winston and I are going to get very sad here. And we've got the Winston cam here. There it is. And he is feeling pretty relaxed about the market this morning. Wouldn't you say, Winston? Are you feeling pretty relaxed? I think so. So I'm going to walk you through, is this 2012-8 over again? Is this, I meant to write, is this 2018 again? And some people are putting that out there, and I want to make sure you understand that and sort of debunk it a little bit. I also want to show you that pessimism is at insane levels. We're going to touch on European inflation because we've had important data out there. US inflation data just came in like 33 minutes ago. That's really moving markets already this morning. Is there any good news? Surely there must be something, right? I found something. I'm going to share that with you. And then I'm going to tell you that what you're doing right now is probably the most dangerous thing you could be doing right now. And I'm going to try and walk you off the ledge just before the market opens. And then I'll tell you what I'm actually buying. And I'll give you the actual ticker. I know there was some doubt in the chat here. And I will give you the ticker. I can't say you're going to like it, but I'm going to give you the ticker, and then we're going to do a monster Q&A, so you can ask questions in the chat. That's why we do this live, and we'll try to wake Winston so he can explain and answer that to you. Winston, any thoughts? No. So there we go. So if that's something you want to learn, then all of these 8 points, then write learn in the chat. And I know that you actually want to know this, and I'll keep making these videos for you. And I'll see you here live every morning the market opens, at least most mornings. So just write learn in the chat, and I know that this is something that is going to hit home for you. George, my friend, you're the first one. Brilliant. Learn. Alfonso, Marilyn wants to learn. Brent says he's down for the count. Yeah, he's pretty exhausted, isn't he? Agree with Winston. Brent wants to learn. Pee-wee, Nicholas, Alfonso, Dave, Theo, Margaret. Okay, it's coming in a little too quick. A lot of you are wanting to learn, which is brilliant. I love you for that. So here is somebody who puts out, I don't know who these people are. They put out this data chart, and they show you on the left a chart which is 2018, you know, when the world ended, and this is now. And they're basically saying the pattern's similar, and therefore you should, you know, dig a deep hole, just throw yourself in it, and then just finish life right here. That's, of course, a bit of an exaggeration. Now, they do have a point, and they're teaching you something actually very, very useful here. And that is, there is a green line in here. Can you see that? Can you see that green line there? And they're labeling that correctly as the 200-day moving average line. Below the 200-day moving average line, nothing good has ever happened. Nothing, ever, nothing at all. So this is bad, and above here is good, okay? Just to make it simple. So right now, the S&P is below the 200-day moving average line. And the problem they're pointing out is that in 2018, we dropped below it, and then we sort of bounced off it, and we went lower, right? And then we did that again, and we again didn't break over. We went lower again, and then we bounced off it a third time, and then all hell really broke loose, and you should have just buried yourself in the garden. And what are we seeing now? We broke through it, and we appear to be bouncing off it again, and we're going south. And that is not a pretty thing, and that's generally speaking why you don't want to be buying stocks, at least. We'll go into the stock and index separation here in a moment. You don't want to be buying stocks below the 200-day moving average line. Like, if you literally only learn one thing today, don't buy stocks below the 200-day moving average line, you will be smarter than about 90% of people in the market. Seriously. I'll show you how to turn the 200-day moving average line on as well. You better look that up if you're not familiar with charts in just a moment. So they have a point, but we would need like another bounce off it, maybe even another bounce off it before we really went lower. 3 bounces like we had in 2018 are definitely a very, 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 very bad thing. So at the moment, we've got one, not quite the same thing, and we'll have to see what happens on the 2nd of April, which is, you know, tariff day. Now, point number 2, it's Some of you asking about kitties. The little pregnant kitten I've got is she's very well. She's happy. She's bouncing. She's playing, and we're expecting kittens probably about 2 or 3 weeks out. I need to try and calculate exactly when we should be expecting it, because we obviously don't exactly know. We have a fairly good idea when they did their thing, because I was away for about 3 days on a trip, and I came back and I was like, you look a little bit pregnant. So we'll be having kittens, which will be fun. Winston's going to like it. I think he's going to really like it. I think he's going to sniff them and lick them and sleep with them. It should be very cute. So there'll be lots of kitten footage on this channel soon. If you don't like fluffy things, kittens or golden retrievers, go away. This isn't the community for you. Now to the 1,400 of you who've just joined, welcome, brilliant. To the 200 of you who've hit the like button, you're amazing. I shan't mention the other 1,200 if you don't know where the like button is. So what is this? This is basically telling you here in the middle that a lot of people are bearish. There are lots of bears about. We're at a very, very high level of bearishness right now, which if you go back in time is pretty extraordinary. We haven't seen that level of bearishness since, well, we did see it in 2021 here, but you know, we also had it in 2008, you know, when the world ended, and then here in the sort of 89, 1990? What is that, Gulf War or something like that? But we've never had 5 days or more of extreme bearishness since, well, 2022. And then the previous time was literally 1990. So people are just like not taking their medications. Like I'm all good with you being on board with, you know, RFK and less pharma, but do take your medications if it's recommended. Love Winston. Yes, here he is, still snoozing. Can we access these charts? I was actually thinking it might be useful to put these together and maybe email them out once a day, something like that. We might do something like that. That could be a cool thing to do, or we might turn them into a blog post. I think we kind of are doing something like that already. So I think that's in the works, that's coming. Okay, now let's talk a little bit at what's happening today. Why are the markets looking the way they're looking? I'll show you what the pre-market looks like in just a second. In fact, I'm teasing it. Why don't I show you right now? Where is it? There it is. Right, pretty red, but no like huge red numbers. The worst is sort of Amazon 1% down. Tesla is about 1% up. What's the top one stock? We haven't gotten there yet. We're going to get there in just a few minutes. Bear with me. I want to give you, the reason I want to do it in that order is because I think you need to understand the bigger picture to understand the point. If I just gave you that one stock, you would be like, you wouldn't really know why. You wouldn't really be acting on. You wouldn't know what to do with the information, because you'd be missing the bigger picture. And to really understand the picture, you need to watch Winston sleep. Now, in all seriousness, Europe just has inflation data out, lower than expected, and that means what? That means more rate cuts in Europe, right? So the ECB is going to cut rates. What about in the US? Well, we just had rate data out as well, and then I'll get to that in a second, and it wasn't quite what we wanted. It really wasn't quite what we wanted. In fact, it's a little bit hideous, really. And I'll show you the data. Here it is. So you can look up this data inside TradeVision as well. Every day we show you like what's coming up here inside TradeVision. If you want to get yourself a free trial to that, you can. It's the link's down below as well. So what have we got? Well, okay, let's run through this. Personal spending came in a little weaker than expected, just a little bit, not hugely. PCE price inflation, which is sort of the key number there, came in as expected, so that's neither here nor there. Personal income came in massively higher, like twice as high as we thought. So you could think that was good news, but is it? And then the core PCE, which is kind of the key number we look up because it's Papa Powell's favorite inflation metric. It's what he wants for Christmas and his birthday. And it came in higher than expected. So what have you got if you color-coded this? Well, this is bad, right? This one's bad. Now, the higher income is in itself potentially also inflationary. So it'll probably mean there will be no rate cut in May, which is what some people are hoping for. I think June or July is on the table, but May, no rate cut. And the market did not like it. Not massive disappointment, but it's a little bit off, and I'll touch upon this a little bit more as well. We'll also talk about SOFA in Hood in a moment, because that's also definitely a topic out there. And we're actually just working on a video on that as well, because I think that's worth exploring a little bit more depth. But you got to ask yourself, what do you do with all of this information? How do you put this all together? And I think, well, we deserve to have not only the same information, but the same rule book, the same skills, the same edge that Wall Street insiders have. Don't you think so? And by the way, if you agree with me on that, then write agree in the chat down below, and that way I know this is making some sense for you, and I'll walk you through the rest of what's really makes sense here. And then what I'm doing here today as an ex-banker doesn't mean you should do it, but at least you understand the logic and how Wall Street would look at it. And to me, the whole system that we've got here is, I call it the Wall Street protocol, because that really is what it is. And I've been using this literally for many years, but the guys who taught it to me have been using it for decades. It's literally the best traders out there who've been using this. And I mean, say traders, you could also call them investors, by the way. There's exactly the same thing. I'm loving all the agrees here in the chat. And it's way simpler than you think, and you can actually learn the foundation of this in about an hour, right? And it's part of our actual mission here to teach it to 1 million people, because Winston's a kind soul. You see that one here. So he just wants more golden retrievers out and about, less of you being at work. And so what I'm going to do for you to walk you through this very difficult market right now, I'm going to run a live investing masterclass tomorrow, Saturday. I'm going to give up my Saturday evening for you guys, your Saturday morning, 11 a.m. New York time. And you can join us if you want. And what are you going to learn? Well, you're going to learn, how do you win big when the market recovers? Because it will. And most people are going to miss out on it. But I'll also teach you, and this is really, really important, how you keep those winnings when the market crashes, right? Because that's really what would have helped you in this market situation, and it's what's still going to help you, because, well, what if we go a lot lower, right? So if you want to come and join me there, and I'm super excited, literally, after me mentioned this yesterday for the first time in our live session here, over 1,000 of you signed up, and I said there'd be 1,000 free spots. So I've upgraded the session, and we can now take an extra 1,000 people, but the spots will go as well. So how do you join us? Link's in the description. Link is also now officially in the comments. There it is. I pinged it in there. I'll pin it to the top of the chat as well, so you can join us. It's also down below in the description. And it'll be a blast. I'll teach you for about 2 hours. We do a monster Q&A, and it'll be just like, what are we going to do here the next, say, 90 days in the market, given how things are panning out. So if you're going to come and join me, write join in the chat here, or if you've already signed up, write join in the chat, and I look forward to teaching you guys. I do enjoy those, and I've actually already I probably spent about half the day today preparing for it. So you guys are gonna get some real insight there. That's always my intention, to over deliver for you guys. And I see a lot of you guys already signed up. Brilliant. Write join if you have, or if you're about to. Dennis and John and biggest stickers. You're gonna love you for that. Okay, so let's while you do that, and while you sign up for that for the live masterclass tomorrow, and again I'll put the link in the chat here one more time. I'll walk you through the key stuff that's happening here today. The mistakes to avoid. I'll tell you what I'm buying. We'll look at your favorite stocks. We'll do a Q&A, so you can ask me questions as well. Loving all you guys for joining there. And okay, so this is what we've got in basically. This is like the inflation data I just showed you in a chart. And I just wanted to show it to you because there's going to be a lot of headlines out there going, inflation is terrible, it's all over. And of course, that's because a lot of mainstream media is very against this government and Trump. So they want to like take any negative news and make it into a massive thing. But if we look at what's going on here, well, look, housing is coming down very significantly, right? And the lower interest rates go, by the way, the lower housing costs go. So, at least in theory. If you look at what's actually causing more inflation now, it's goods, it's core goods. And that might increase for a little while because of tariffs. And I don't think the tariff data is in on this yet. So you kind of have these two things: housing's coming down, services are coming down, but income's going up, but wages are not, which is weird, and just the cost of goods is going up. But it's still overall moving in the right, more or less in the right direction, but we're off ever so slightly on this particular one, though, about 0.1%. So some people are going to make a big deal out of this. Some people may not. Now, I promised you I'd find you some good news. And of course, it had to revolve around the almighty Trump. So what's the good news? Well, he hit car companies yesterday pretty hard with the tariffs, and that's all car companies, right? Every single one of them. And Ollie Round, give me a few minutes. I'll get to the number one stock. I need you to understand the framework so that the stock actually makes sense for you. And calm down. I think you guys, you've all joined. And he hit the car companies with the tariffs. Now he's saying interest payments on cars made in America will be deductible. Now, how do you define made in America? Is it assembled in America? Is it the majority of components are American? I don't know. There'll be some definition somewhere, but Tesla is definitely going to qualify this because they are the most American-made car, right? They're 100% assembled in the US, and about 70% of their parts are American. So this is bullish, at least for Tesla. It is potentially also bullish for other car companies, because if the interest rate payments on cars are tax deductible, well, depending on what your tax rate is, it could be a significant discount on that car purchase, and therefore you might be willing to spend a little bit more. It might help offset the tariff situation. You see what he's doing there? He's sort of giving with one hand and he's taking it away with the other, or the other way around, right? And understood. We made Ollie into a patient investor here. So that's important. And then, let me show you this one. What did I say to you? I said to you, the worst mistake you're probably making is this one. And Sir John Templeton is one of the great investment legends out there, tremendous investor, very patient investor. And he said the four most dangerous words in investing are, this time it's different. And it's true. Every single time I have really screwed up as an investor, I said to myself, but this time is different. Now, that might not mean a lot to you unless you actually have rules for investing. But what it shows you is that in Sir John Templeton's mind, everybody has rules. If you don't have rules, like, you shouldn't be in the game, right? If you literally don't know the rules of the game, how are you going to win? Like, how do you know what's the right or the wrong thing to do if you haven't been taught the rules? So I'm going to teach you the rules if you join me tomorrow live at the live webinar here. And again, link is down below there in the chat. And by the end of that, you will stop making this mistake. And I see it all the time. Like, I see it. People are like, oh, I'm buying AMD because I think it's cheap, or it's just like, it's an opinion that's based on nothing, right? And that's the problem that we all make. We make emotional decisions on sort of something we want to be true, but not because it is true. So the stock market is a machine that works in a particular pattern. And once you understand the pattern and you can spot it, you know what to do in each moment, whether it's going sideways or up or down, or, around and around in circles. It really isn't that complicated, but you got to be taught it. So that's what we're going to do tomorrow. So I appreciate here Sir John Templeton's little word here. Does that land for you? Does that make sense for you? If that makes sense for you, put a 1 in the chat here as well. And okay, CoreWeave, my friend, I'll talk you out of the CoreWeave ledge as well. That's really one of those. Oh my God, that's really stealing from children and orphans, basically. Now, at the moment, we are below the 200-day moving average line, right? And I started the video like that. And this is a nice chart that starts in 2008 and it ends in whatever, 2020, doesn't really matter. And it shows you all the moments where we were below the 200-day moving average line, and kind of illustrates that those were probably pretty good times to buy, right? So right now, if you look at the S&P, look at that. That little brownish line there is the 200-day moving average line. We're below it. Historically, that's a good time to buy. But we could also go lower. So this is only a good time to buy if you have a long-term horizon. And long-term could be 5 years, it could be 10 years, but it's definitely not a month or 6 months or even till the end of the year. That is not a suitable horizon to be buying right now. It just isn't, at least not from the rules that Wall Street uses. So what are you going to do? What are you going to buy? And what is the reason for you buying it? If you want to learn that, come and join me tomorrow. I'll teach you live. You can ask me all the questions you want. But right now, what am I actually buying? Well, let me show you the S&P is, as I said, it's bouncing. It's crossed its 200-day moving average line. It's bouncing off it down. That's not pretty at all. We're looking at SPY, by the way, doing exactly the same thing. If you think that the two are different, the S&P and the SPY are basically the same thing. One is an index, one is the ETF, bouncing off that 200-day moving average line here, right? That's not a pretty sight. So that's happening. And by the way, our indicator here to give you a bearish signal, see that here, red one, and the green one, and the red one here, and so on. It's been pretty good on the S&P. We're beating the S&P very nicely by about 6 percentage points, which is pretty impressive. So what are we doing? Are we buying Tesla, say? Well, have a look at Tesla. Are we below the 200-day moving average line? Yeah. What did I say at the beginning of this? I said nothing good happens below the 200-day moving average line. And that's the 200-day moving average line. And we are below it. It's not good. And can you see yesterday's candle? Can anybody make that out? I know it might be a little bit small for you here. Do you see that green candle there? Well, let me draw it for you a little bit bigger and give you another little insight into how Wall Street looks at charts. When a candle looks like this, which is what yesterday's candle looked like, what does it mean? Well, it means we started the day here. We went all the way up, and then we came all the way back down, and we basically closed more or less where we started, just ever so slightly above it. Is that a good thing or a bad thing? Well, it's a bad thing. It's a very bad thing. Why is it a very bad thing? Because it means that the bears won, right? Because we went all the way back down. We were up here. We were happy. We went all the way back down. So that's not a good candle. That's a very bearish green candle, probably the most bearish green candle you can probably get. And let me show you the last time we had one of those. I was up here. You see that? Next day, we gapped down. Now, this morning, we're looking quite good because of what Trump said about Carly's interest being tax deductible, which is good. But I'm not buying this stock. And there's pretty much almost no stock I can find at the moment that would qualify for the classic buy signals of Wall Street. You know, we have a breakout indicator in TradeVision that sort of emulates the buying rules of Wall Street. There's almost nothing it's recommending. I mean, yesterday we had 4 breakouts, and most of these are Chinese stocks, which is super volatile, and one is some sort of pharma whatever, which went up, tremendously yesterday, 20% or something, which again makes it a pretty risky place to get into right now. So there's literally nothing that the market's telling me to buy. We scanned like 2,000 stocks, right? We got 2,000 stocks and we found nothing that qualifies. So is my video, I'm not buying anything? No, I'm actually nibbling on the S&P. And that sounds boring, right? Sounds really boring, S&P 500. And there are many ways you can buy that. You could buy VU, or you could buy SPY, or whatever ETF has the lowest fees. So why am I buying that? Because the market moves like this, right? And you have this line that you can draw through it. And I'm simulating here, obviously. The red line is basically the 200-day moving average line, which means you are below the 200-day trend. And if you buy the bottom there and you have a really long time horizon like I do, I buy stocks every week, and I'll keep doing that for decades to come, then I'm buying cheaper than the people who buy up here when everyone's euphoric about them above the market. So my goal with index buying is very simple. Buy a little bit more when everyone's fearful. Very, very simple. Now, this to me applies only to the S&P 500, possibly to the NASDAQ, but it's a little bit more risky. It does not apply to individual stocks, because individual stocks can go to zero. They can go out of business, right? And they don't have to go up. The index has to go up in the long run. It's just an equation of money printing and inflation and the fact that it's 500 stocks. And if one of them goes kaput, if I could spell stocks, what happens? Do you then have the S&P 499? No, we add one more stock into it, one fresh one, And therefore, we're back at the S&P 500, and a little bit more of that stock. So it's just sort of the boring, steady way to make money. It's not the way to beat the market in the long run if you just buy the S&P. But if you buy the S&P below the 200-day moving average line, and as I say, you have that very long-term horizon, it's very, very likely that you will make money or more money than average just because you're buying when everyone's fearful. It's the good old Warren Buffett, buy when everyone's fearful, don't when everyone's greedy, right? That's pretty basically it. And Jessica's asking, do you own any individual stocks currently? Some, not a lot, mostly just some options. And what I would do with those is we want to sell them at certain points. We want to sell them at certain moments where it doesn't make sense to hold them anymore, right? So, go back to the Tesla example. If you'd sold somewhere up here where we triggered bearishness, or you followed simple trend line thing, and I'll walk you through that tomorrow if you want to really learn that, you would have sold at some, say, $420. So you sold up here, sold at $420. So say you had 100 shares, right, of Tesla. You would have $42,000 cash right now, right? Now, say that recovers and it sort of triggers our buy signals again, and say that happens, I don't know, somewhere here at 330, say. So say we then buy back in at 330, how many shares can you buy with $42,000 cash? Well, I'm not that smart. I can't do the calculation. But $42,000 cash, and you're buying at $330. Whoops. Let me try that again. $42,000 is your cash, and you're buying back into Tesla at $330. You now get 127 shares. So what happened? What just happened here? Well, by selling and buying back in lower, you moved from 100 shares to 127 shares. Do you see what you did there? You got 27 shares for free. You made 27%, essentially, assuming we're going to go up, right? You're going to go up a lot more because you own more shares. That's why it's, in my humble opinion, and in the opinion of all the guys I've learned from, all the very successful traders, we've been doing this for many decades longer than me. That's why we sell. And selling is far more important than buying because if you only buy, you actually never realize any real profits. Whereas when you're selling, you actually realize a real profit. Now, somebody's going to scream, oh, what about taxes? Well, when you're making profit and you live somewhere with taxes, you're going to pay taxes. And you should be celebrating that because it means you made money. If you never pay any taxes, then it means you never made any money, right? Now, you could, of course, also do this in a Roth IRA or something like that, and that would be a smarter way of doing it. But taxes really shouldn't come into it at that sort of individual level, right? Let's see if Winston agrees with that. Winston, do you agree with that? Is that a yes? What do you think? He seems a little sleepy today, doesn't he? Winston. Alrighty, so in all seriousness, ding, ding, ding. Dr. Denise says trade vision is invaluable. Brilliant. I love you for that. And I am promised that we'll have an app by the end of the month. Well, that'll be, there's a weekend in between, but hopefully sometime next week we'll have a mobile app for trade vision. It's in the final polishing stages. We're just dusting it. Why didn't you have many individual stocks, says Jules? Because most of them sold. They got knocked out by my rules. I have automations on them, so they sell. And the market stays broadly down pretty significantly, on something like a lot of tech stocks, they're down a lot. So, we therefore sell. Tesla is down 40-odd%, for example. So we try to sell near the top. Now, what's the best trading app to use in Europe? You mean broker? My Europeans use mostly interactive brokers. Tasty is maybe a little easier to use. Mostly they all do the same thing. You just want to look for the one with the lowest fees. Tasty is pretty good. Now, shall we look at the live market, or would you rather avert your eyes? Let's have a quick look at QQQ as a sort of measure of how we're doing. We're down 0.6%, And what isn't so pretty is that we are below the support level of 480. So if we drop, what happens at 480? At 480, Wall Street buys. Okay. So if you look at this live on a minute chart, we're only 2 minutes into it, so we're not going to be seeing a lot. But what you should be seeing is tremendous volume as the institutions are buying. And we're going to hopefully see some candles that bring us back towards the 480 coming up here. And what you can see that here already, right? The blue line jumping up here for the next candle. And then if we fail to reclaim the 480, what happens then? Then the actual selling kicks in. Like the institutions then give up in a sense and start selling too. So 480 is support, but when you drop significantly below it, the support moves away and bad things happen to good stocks. So that's one thing to look at. Now, the only thing that was up just now was Tesla, which is now up only 0.5 percentage point. Not exactly a great deal. What about Nvidia? It's down 0.2%. Okay, it's pretty flat, you'd say. But again, that hideous candle there yesterday, not a pretty candle, right? We're closed almost at the bottom of yesterday's trading range. If you look at Amazon, that looked pretty hideous pre-market. Let's have a look. And they're down 1.3%. Ouch. And they're below that brown line again. Now, what was the brown line? It was the 200-day moving average line, right? We're not happy below that, so we're kind of really going nowhere with that. What about Apple, which is also still important? Apple is down 0.7%. What about Microsoft? Let's look at some of the big tech stocks here. That's down a percentage point, also not pretty. What about our some of more techie ones? Palantir is down 1.67%. Below, that's one of the few stocks that's actually had a pretty decent time with this crash. They're still very close to the 50-day moving average line, but now again below it, which is nice. SoFi apparently committed suicide overnight. No, not quite, but yeah, pretty ugly candle yesterday. Drop down. We are grinding against the $12 support line here, right? Which is where the market makers buy, where Wall Street has to buy. So you want to stay above that $12. And that's basically on the whole Robinhood thing. I mean, yeah, Hood is putting out some cool products. Now, Hood is not a bank. Hood does not have quite the same offering, but they do have very, very shiny marketing. I like Hood. I think it's a great product. And it seems to be kind of hitting SoFi here, although Hood is down 2.9% here for no particular reason. So I'll put out a video. We're doing a bit of a deep dive. I'm doing some research on that. Winston, of course, is in charge of the research. Aren't you, Winston? Yes, he's sleeping all the way through it. And he's basically so far coming to the conclusion that he likes both stocks, but he still thinks SoFi has something that might be an opportunity. But yeah, we'll do a full deep dive on that over the weekend, and we'll put out a video for you there in the coming days. Any other stocks you want me to look at? It would be great if there was a light ticker symbol in the background of the chart. Oh, really? Oh, you'd like that, would you? Okay. Yeah, we could do that pretty easy. You don't think that would be messy? You don't think that would be messy? What would you use it for, Scott? I'm going to take a screenshot of your comment and I'll submit it if you give me a good reason for it. You can submit it yourself too, of course, but I'll gladly do it for you. Zim is up. Yeah, but only a little. It's still looking pretty ugly here after the gap down. What else have we got? We got a few requests for Google. That seems like a conservative thing to look at this morning. And yeah, I'm not doing a lot. It's down 0.5 percentage point here. The support there sits at 160. You're going to want to really hold that. You're going to want to hold the 160. Some of you think it's a bit messy. It could be a little messy. Yeah. Okay. CoreWeave. Okay. CoreWeave. If I just said to you, don't, would that suffice? So CoreWeave is this IPO that's happening. What is CoreWeave's business? Not really clear. They basically buy, my simple understanding, they buy GPUs from NVIDIA and they lease them out. Now, they need money. That's why they're doing an IPO. They have to pay for some of their debt, and nobody wants it. Nobody wants to buy it. No institutions want to buy it. So NVIDIA is bailing out the IPO. And now, given that they are a major NVIDIA customer, they obviously have an interest in doing that. But it sort of says to you, like nobody wants this. This is just not a business. Like, I don't even know what this business does, to be honest with you. Like, what is the purpose of it? So what are IPOs designed for? Is it to spread joy and love? No. What's an IPO? An IPO is an initial public offering where a company goes public. Sounds great, right? But who owns the company at the moment? Well, it's investors. Right? A lot of the time, it's private equity investors. And they're fairly sophisticated. They understand what they're buying. They take some risks. And what happens in the IPO? These guys sell to you, to retail investors. They call you exit liquidity because they're dumping liquidity, because they're dumping shares onto you at a valuation that they think is so high that it's worth selling at. So you got to ask yourself, why would you ever buy an IPO? Right? It's just the weirdest time to buy, and the weirdest people to buy from, because they're sophisticated investors who really understand that business. They might have been in it for like 5 years or even longer. They understand everything about that business, and then they package it and polish it, the turd. And then, did I say turd? Sorry, obviously I didn't mean that. I'm sure CoreWeave people are fantastic. Disclaimer. But yeah, they're putting something out there that they don't want to own, and they want to sell to you at the price that they want to sell it at. They set the selling price, and you're the suckers who buy it. So just don't buy IPOs. Just don't do it. The whole thing is intended to create FOMO, right? Stock will still be there in a week and in a month. And if it turns out to an amazing business, at the moment it's running out of money and nobody wants to buy it, so their major supplier has to bail them out, then I think there might be an opportunity to pick it up a little cheaper. That's the way I would look at that. Now, so do you usually wait till the end of the trading day to look at dark pools, Jason? Well, there is a rule that really the only stock price that matters is the one at the end of the day. And I do subscribe to that, because it means the buyers are willing to hold the stock overnight. They are willing to be more convicted, so to speak, on that stock. And that's generally a more important factor. So I tend to only look at end of day prices, not so much at the intraday. But yeah, we do have dark pool data live here inside TradeVision. So if you want to see what's being bought and sold live, and I would look at the large trades only. So there's a filter up here under premium. Look at the large trades, and you can see, like a few seconds ago, somebody sold $1.2 million of Tesla calls. Not particularly bullish, it's bearish. You can see two very large bullish trades on PDD, the sort of Chinese Amazon type thing, about 8.7 million in total. That's pretty unusual. But mostly you're seeing bearish trades coming in here. Well, these are from yesterday, but yeah, you can see them running in live, and it's useful. I definitely like to look at it before I put up a position, and I'll be like, let me just see what the sentiment is on this one. And it gives us a pretty good indication. So that's also available. It's a free trial to TradeVision. I'll put a link in the chat here for you as well. You can see it. There it is. Now, any questions, my friend? When are you starting to sell calls or call spreads? Yeah, you can do that. You can do that. It's not quite as ideal if you understand volatility. But yeah, you can get bearish. Well, basically, I'd want the sectors to turn bearish. The reason I'm doing so little right now is simply because a lot of this is caused by one man, this one here, right? And so I might be incredibly bearish on a sector, but he could flip it around this coming Wednesday and make everything very, very bullish. And I can't control that. So when something very unpredictable comes up, well, it's predictably unpredictable, then we can use that information and we can, well, we could trade the predictability, which I am, which is volatility, but I'm doing very little on the individual stocks because it's risky, and I don't like risky. And one of the hardest things to do as an investor is just to do nothing. So I'm sitting on quite a lot of cash right now. I'm putting some of it into the S&P, and then when we have a little bit more clarity, then we'll go back into individual stocks. And in the meantime, I enjoy the fruits of the volatility trades and buying the S&P at a 10% discount, which isn't such a bad thing to do, right? Need some more Trump memes. So there's a really funny one today, actually. And, you know, if you have a sense of humor, that is. Some people don't. Some people just let politics get in the way. I thought this one was very funny. Let me see if I can find it. I do tweet quite a lot. This one here, isn't that funny? I thought this was rather brilliant. So now, why can't I buy trade tradition from Croatia, my friend? Because your government is run by lunatics who say, if we take one customer in Croatia, I think we have to spend at 3,000 euros to file VAT in Croatia, just for one. There's no the minimum to file for VAT in Croatia is more than zero. So if we have $1 of sales, we've got to spend about $3,000 on filing. So we'd have to ask all the other users in the rest of the world to subsidize the one Croatian user. And I'm not a believer in communism, so therefore we don't. Maybe eventually we will, if there is a large demand for it from Croatia. But yeah, at the moment, we just don't. And it's a thing. Mexico is the same. They also have a completely loony tax rule. So yeah, I just don't believe that everybody should subsidize the minority. I think that's really makes a lot of sense. Can you explain volatility trades? It's a little complex, and I wouldn't recommend it as a sort of first place. I see it almost more as a golden inspiration to learn. You want to learn index investing first. You want to learn stock investing first. You then want to learn options trading, and then you want to learn volatility trading. That's sort of the hierarchy of it. And it can all be done. It can all be learned, but you got to do it in order, because if you do this one wrong, it'll blow up your account. And I really wouldn't want that for you. But it is one of the very few instruments that must always come back down to earth. So it doesn't go up in the long run. And if you look at, let me see if I can show you that here. Yeah, this is a nice illustration. It's something that always falls. You see, so this kind of shows you basically how volatility works. It always goes down, right? So it's a really odd instrument because it's a bunch of futures contracts that expire. So it's coming that always goes down, and because we know it always comes down, but it has these spikes, right? Let me show you here. So it has these spikes. So what we do is we sell the spikes, because we know it has to come down in the long term. It's just, there is some risk in setting that up if you don't know what you're doing. So we need to limit our risk, and obviously I do that, and there's ways of doing that. But yeah, it's a beautiful thing if you know how to do it, and we can make very, very nice returns that are essentially risk-free, provided you manage your risk properly. So it's a really, really sweet thing. And then the other thing I do is that if it goes really low, when it goes down to these really, really low levels, then I buy it. So we basically let it run up, we sell it, and then we sell it again when it goes down, and that way we make money as it goes up and as it comes down. It's a really lovely thing. It needs patience, and it needs some thorough understanding of it. So it's really not something for beginners, but it's hopefully something that will inspire you to become a great investor, because it's one of those things. It's just like it's a money printing gift, in my humble opinion. How many years have we been making these videos? Yeah, I think this is year number 5, and I'm loving it. And as long as you guys love it, and as long as you guys get a lot of value out of this, and as long as Winston is happy with me making videos, which is always, of course, the litmus test here, then as long as you guys feel that you're getting a lot out of this, and a lot of people are getting better, and I get lovely messages every day from you guys saying how we're literally changing people's lives, I'm very, very motivated to keep doing it, because it's super fun. And if you want to really take a big step towards learning, I mean, really learning the skill, money is just a skill. Managing money is just a skill like any other. There are many skills I don't have. I've been very lucky to have been taught this one, and I'll teach it to you for free tomorrow. Come and join me, felixprehn.org/webinar. Link is down below. I'll put it in the chat as well. And it's just, yeah, it's just been a super fun sort of retirement hobby, which is slightly spiraling out of control in a really, really good sense. I mean, we've got like thousands and thousands of students now, and we've got about a dozen of my mentors now in the academy, all retired investment bankers, hedge fund managers, guys who've managed billions of dollars for big hedge funds on Wall Street, managed pension funds and so on. And we all are getting a real kick out of just showing people how it works and helping people change their life. So that's really what the mission is here, and that's what it's all about. So come and join me tomorrow at felixprehn.org/webinar. And shall we have a final glance at some headlines and some Doomberg here? EU plans concessions for Trump after reciprocal tariffs hit. That's a bit of a change of plan, isn't it? I thought they were going to hit back hard. The European Union is identifying concession it's willing to make to secure the partial removal of US tariffs. EU officials are holding meetings and they're caving like the weak simplings that they are. And of course, it is the smart thing to do, because Europe sells a lot of very low margin goods to the US, and tariffs kill off their margin. They just can't afford to. So they're looking at, what are they looking at? Well, digital taxes. This is what I was talking about earlier. Digital taxes regulation is complete madness. So that's positive. That is positive, right? Is that coming into the market yet? Let's have a look at QQQ. Do you think deals will be done? If these were businesses, I'd say yes, because they have a profit incentive and they're usually run by smart people. Countries, not so much, right? People tend to elect the least competent most of the time to run countries, just people who've been there a long time. But yeah, we're seeing a little bit of a rebound here, right? Now we're still below the 480 support on the Nasdaq, so it's not exactly brilliant. Let me have a look at where the S&P sits. We'll be seeing a little bit of life coming back into the market here, just not a lot. We're above the 650 support here on the S&P, which is good. Now, enjoying not buying stocks with you. Same here, brilliant. Trump's tariffs more bark than bike. Yes, and that's his intention. I posted the other day, like, people should literally read The Art of the Deal. It's actually a very good book. It's fun. I read it like 15 years ago or something. It's a good book, and it gives you a pretty good insight into how Donald thinks. He goes in hard and he bluffs, and then he gets a deal done. And you may like it, you may not like it, doesn't really matter, but that's just the way it works. So I think people should understand that if they want to negotiate with him. What else we got? Traders are priming for tariff day. Indeed, Trump team signals, blah blah blah. Okay, this is just a lot of sort of Bloomberg, we hate Trump thing. That's about it, really. I think that's pretty much the only major news there. That will, of course, be quite useful if Europe caves in a little bit, and it might give other countries also the idea, because that's really the only way to deal with it. And frankly, the US has lower tariffs than pretty much any other country out there. So it's hard to win the argument, I would say. Now, where do we access the webinar? I registered Jason. We'll be sending you an email with the links to it. Have a look in your spam folder if you don't see it, but we'll be sending you some email links with the reminders for that as well. Winston's in the way of the graph. Yeah, sorry about that. I forgot to push the button. Why do you choose to invest in the S&P over the Nasdaq? The Nasdaq is just a more volatile cousin, really. So S&P just moves a little bit more steadily. That's really it. So that's really why. But of course, you could. That's what I said. You could. I'm not saying you should do either, by the way. But yeah, we're slightly below the 200 on. Let's look at the QQQ. we're actually even below the support level of the QQQ. So yeah, just tech's getting a hit a little bit harder. So it just depends on your appetite for risk. Mine, for this purpose, is relatively low risk. I take about half my money and I manage it much more actively. I put about half my money into the S&P, sometimes into the NASDAQ, sometimes into another ETF. But I sort of have half of me which is very conservative, and I have half of me which is a little bit more active, and the active side makes a lot more money. But it gives people around me, well, they sleep better because they know what's there, and it's going to compound at 12% or whatever. Simon, you want to have the prices of sort of key tickers at the top? Yeah, we could do that. That's an interesting idea. MQQQ is a little bit better. Yeah, MQQQ is a little cheaper. Winston likes it, and Winston, he's actually working up on that one. Yeah, is it QQQM or is it MQQQ? It's a little cheaper if you wanna own it for a long term, which is of course what matters. It's all about fees. Gold calls, if you got them, you've been doing very, very well. So on that note, Winston says, come and join us tomorrow, live, 11 a.m. Eastern time. I will teach you our trading rules. I'll teach you how to make the most money on the rally that will inevitably follow this dip. And I'll also teach you how to keep the profits that you generate, because you've had green positions in your portfolio, and I'm betting that right now they're red, and that's avoidable. And if you did that, you'd be sitting on a lot of cash right now, and you could be buying cheap stocks when they recover, which would be lovely, right? So that's our intention for tomorrow. And I love you for watching. I love you for tuning in. Winston and I say thanks for tuning in, and see you tomorrow. All the best.